Yes, we indeed believe that, and I think the topic he's going to talk about is the right time, right place, right? And before we invite him on the stage, it gives me immense pleasure to introduce him to all of you. Well, as we all know, it is always important to be at the right place and at the right time. What does it actually mean? In the best position or place to take advantage of an opportunity. The key to success is to be in the right place and at the right time. And now I would take this opportunity to invite on the stage Mr. Ashish Somaiyaa, CEO, White Oak Capital Management. Mr. Ashish has over 20 years of experience in business strategy and management, process-driven sales and distribution, product development and marketing of investment offerings. So let us learn from Mr. Ashish Somaiyaa on how important it is to be at the right place and at the right time. Can we hear a big, big round of applause for him as we invite him on the stage?
I should have asked Vijay what is the trick to running this. Is it that slide change करने से चला जाता है क्या? Okay. So I'd like to thank Alpa and PIFA members and all the attendees here for inviting me here and giving me the opportunity to speak to all of you. It's my pleasure. As has been mentioned, the topic of my talk is to be in the right place at the right time. And what I've done is that before I get into the presentation, there is a short quiz. Can we go to the slides, please? Can we do the slideshow so I can change the slide? Yeah. So, very, very difficult question for all of you. Who is the most successful and most famous investor in the world? And I know it is very difficult, so I put a hint also at the bottom. Please read carefully and answer. Who's the most successful and most famous investor? Mr. Buffett. Huh? No? नहीं ये साइड पे मतलब स्लाइड शो नहीं होएगा. Okay, so this difficult question you have already answered. So the next question, what is common between you and Mr. Buffett? Now I know that there is some slide sorter which has also been put. Try to ignore it. The quiz is busted already. But what is common between you and Mr. Buffett? Compounding. अच्छा एक्चुअली ये कंपाउंडिंग का बात किया उससे एक चीज़ याद है. आपको पता है कि जैसे लोग बोलते हैं कि सक्सेसफुल इन्वेस्टर्स और वैल्यू इन्वेस्टर्स और इक्विटी इन्वेस्टर्स दे लिव लॉन्ग, ऐसा सुना है आपने? ऐसा बोलते हैं ना कि जो लोग सक्सेसफुल इन्वेस्टर है, वैल्यू इन्वेस्टर है, वो लंबा जीते हैं. ऐसा सुना है आपने? उल्टा एक्चुअली जो लोग लंबा जीते हैं वही सक्सेसफुल इन्वेस्टर हो सकते हैं. दैट आई थिंक इज something to keep in mind. But anyway, more importantly, what is common between you and Mr. Buffett? Is there anything common between you and Mr. Buffett? Sorry? Staying in the business. Actually मैंने hint डाला है यहाँ पे, आप देखिए ध्यान से देखिए. जब भी मिस्टर बफेट को पूछा जाता है कि मिस्टर बफेट what is the secret of your success? हाँ, so in very complicated language, बिल्कुल. So in complicated language he says that the secret of his success is that he won the ovarian lottery. इसका क्या मतलब है मैं आपको समझाता हूँ. जैसे आप जानते हैं, you know how human beings are born? No? No, you have to keep it interactive. हाँ, मतलब ऐसे तो Saturday afternoon तो नींद आ जाएगा सबको. So obviously you know how human beings take birth, right? So at inception there is a race. Right? Like one sperm wins the race, fertilizes an egg, and that is how human beings take birth. Correct? Now the point is that there were millions which were involved in the race. And those millions lost the race, and you won the race, you took birth, and that is why you are here. So what is most important point is that जैसे कभी कभी लोग बोलते हैं कि मैंने इतना मेहनत किया, मेरा ये करियर है, मेरा ये बिजनेस है, मेरा ये अचीवमेंट है. एक्चुअली द रियलिटी इज़ दैट कि भाई जब तक पैदा हुए तब तक तो आपका कोई रोल भी नहीं है, तब तक तो इट इज़ प्योर. उसके बाद जो भी आपने किया वो आपने किया. सो व्हाट मिस्टर बफेट सेज इज दैट the secret of his success is that he was born in 1930 and he was born in US. So it's obviously it stands to reason that instead of in 1930, instead of US, if he was born in Kenya or Bangladesh, he would not be Mr. Buffett. And if he was born in the US, but instead of 1930, if he was born in 1830, then he would not be Mr. Buffett. Correct? So he says that the reason for his success is that he was in the right place at the right time. Correct? So the suggestion is that the thing which is common between you and Mr. Buffett is that you are in the right place at the right time. लेकिन मैं ये नहीं बोल रहा हूँ कि सब लोग मिस्टर बफेट बन जाएंगे. उसके लिए 70-80 साल इन्वेस्ट करना पड़ता है. करेक्ट? और उसके लिए 70-80 साल मतलब 90 years, you have to live 90 years. See, the point is that by 60 years many people will have $1 billion. But by 90 years how many will have 100 billion? करेक्ट? उसके लिए सबसे पहले 90 जीना पड़ेगा और उसके पहले इन्वेस्ट भी करना पड़ेगा. So the most important thing to note is that you are in the right place at the right time. But the last question of the quiz, is right place, right time only about luck? जैसे मैंने बताया कि जब तक आप बॉर्न हुए, आप कहाँ बॉर्न हुए, कब बॉर्न हुए, उसमें तो आपका कोई रोल ही नहीं है. It's completely luck. Okay? And still you find that you are in the right place at the right time. So now I want to ask you, is right place at the right time only about luck? तो उसके लिए भी मैंने हिंट डाला है यहाँ पे. आप लोग मूवीज़ देखते हैं? नहीं देखते हैं. मूवीज़ देखना बहुत ज़रूरी होता है एक्चुअली, बिकॉज मूवीज़ आर नॉट रिटन रैंडमली. यू नो, पीपल हु राइट मूवीज़, दे हैव ह्यूज डेप्थ ऑफ एक्सपीरियंस. ओनली देन दे कैन write those things. But anyway, my point is that there is an iconic movie called Hera Fairy. In that there is an iconic character of Paresh Rawal called Babu Bhaiya. So do you know in that movie the protagonist is Akshay Kumar? Do you know what he says to Paresh Rawal about being in the right place at the right time? Good one. So Alok is a Gujarati. There is a kahavat in Gujarati. Gujarati में proverb है कि लक्ष्मी जी तिलक लगावा आवे ત્યારે મોઢું ધોવા ન જવાય. So what it means is that being in the right place at the right time is not about luck alone. Even if you find yourself in the right place at the right time, you still have to do the right things. And in our business or in our profession, what is the thing about doing the right things? Correct? You are in the right place at the right time, but what is the meaning of doing right things? So if you follow sports, right, now leave Bollywood, if you follow sports, if you follow, for example, tennis. Now tennis is a very arduous and very, very difficult game. And tennis is the only sport where they report a statistic called unforced errors. Why that is done is because in tennis it is most likely that if you don't do any adventures, you just keep the ball in the court, it is most likely that you will win. And the opponent will make all the mistakes. Right? So if you try, they also report winners. But you know that in any match, the number of winners and the number of unforced errors will actually determine who wins and who loses. Same way, if you watch Test cricket, there are many times it happens that, you know, Test match है, slow turning track, difficult match, 4 दिन खत्म हो गया, चारों innings खत्म होने आ गया, and the side which is batting last, on the 5th day, they need 150 runs, and they have 5 wickets in hand. So what does the commentator say? Pitch पे रहेगा तो जीत जाएगा. Correct? So thankfully for us in our profession, just being on the pitch or just keeping the ball in the court is actually more than enough. You know, if you don't do anything crazy, if you don't do anything adventurous, but you last long, I think that is the secret to success, right? So I think this is something to keep in mind. Now nowadays what you're seeing is that there is a lot of talk and there is a lot of excitement. And you know, the Prime Minister also said that India ka Amrit Kaal aa gaya. Like if you see World Economic Forum, if you see Davos, all the publicity was about the Amrit Kaal, correct? Now, there is one issue that all the extremely powerful people, very famous people, very, very powerful people, when they say something, people treat as if is it some slogan or is it some marketing which is being done. Now, the fact is that, you know, it's obviously, this is not all, these are not political statements or slogans. This is actually reality. It is actually grounded in data, okay? And I'm quite sure that people who are in the who are following the economy, who are watching business news, and people who are listening to fund managers, I think you must have been told 100 times about India's potential and why this is Amrit Kal, etc. So I don't want to repeat all of that, but I just want to give you one very, very simple arithmetic that you should keep in mind. Basically, it's like this, that people, returns are always made on growth, correct? So let's take a simple example. Let us say there is a company. I'll come to the country level, but let's take an ordinary example. Let's take a company. Let's say a company has a turnover of 100 crores. On that turnover of 100 crores, let us say they make 20 crore profit. So what is the value of this company going to be? We are in NSE. Obviously, we know that Nifty PE multiple. Let us say Nifty PE multiple is 20 times. So the average company is trading 20 times of its earnings. So if a company has 100 crore turnover, it makes 20 crore profit, PE multiple is 20 times, so the market cap of the company should be 400 crores. Now, if the company keeps making 20 crore profit every year, then the market value will not change. It will remain 400 crores. But if the 100 crore turnover becomes 120 crore and 20 crore profit becomes 25 crores, then automatically the market value of the company will be 25 multiplied by 20, it will become 500. So 400 will become 500 if the profit goes up by 5 crores, correct? So that's why I said that returns are always made on growth, okay? So it stands to reason that if returns are made on growth, then investment will only flow where there is growth. Is that correct? Now look at this at a country level. The world's annual output, the world's GDP, you take pre-COVID, the world's GDP was say $90 trillion, okay? Out of $90 trillion, 22 or 23 trillion was only America. And before COVID, in 2019, the US economy grew 3.5%. So on 22 trillion, if they grow 3.5%, how much growth have they contributed to the world? Say it is $700 billion, correct? Because I said that returns are made on growth and investment will follow growth. So I'm just explaining to you that for the world as a system, where does the growth actually come from? US, which was 22 trillion, they grew 3.5%. तो उनके annual output का इजाफा $700 billion हुआ 2019 में. China, which was 16 trillion, grew about 6%. So they added almost 1 trillion. Now, the world in a good year grows 3%. So if 90 trillion में इजाफा होता है 2.5 trillion का, तो वो 2.5 trillion में से 1.6 या 1.7 trillion contribution was only US and America. So now you understand why they are the epitome of capital markets. They are the single largest destination for foreign direct investment. They are the biggest attractor of portfolio flows. Why everybody wants to export to US and China. You understand that because 60-70% of the world's growth came only from US and China, which means that it will be the biggest investment destination for anybody, anywhere, correct? Where was India before COVID? Our GDP was 2.5 trillion and we grew 3.7% in 2019-20. So which means we were 16 to 17% of the world's population, but we contributed only 4% to the growth of the world, correct? This is where we were a couple of years back. Does anybody know how much we have contributed to the world's growth in 2022? Absolutely. So this is what has changed dramatically because now we are 3.5 trillion and on 3.5 trillion the growth is nearly 7%. So which means you would stand to add more like 250 billion or something. But like he rightly pointed that 250 billion is upwards of 20% because the world is not growing 2.5 trillion. The world is growing say 1.5 to 1.6 trillion and if you add 250 billion then you are 20%. Now you understand why there is excitement to invest in India. And the excitement is bigger because in the foreseeable future, we are likely to be the excitement is bigger because if you see the last two sentences, what we've summarized out there, that India will be the biggest consumer market, the biggest labor market, and amongst the fastest growth investment destinations in the whole world, right? And why this will actually happen is because when we were kids, we were told that having a large population is a liability, correct? But now what is happening is that the richest countries in the world and the countries which contribute the highest to the world's growth, they all are aging. And by rule of thumb, typically populations are divided in three parts. There are kids, there are adults, and there are older people. And as you will appreciate, kids don't produce anything, they don't contribute to growth, they don't consume too much. And older people, to the extent that, a lot of old people are entrepreneurs and they are professionals, so they continue to be active. But by and large, in the rural economy or in the public sector or in formal employment, people who retire, they don't end up contributing too much to the growth. So it stands to reason that maximum consumption, maximum productivity, everything comes from people who are somewhere in the vicinity of 20 years to 65 years of age. And at a country level, the growth is always some function of population and productivity of population. Always. So if your population is declining and because of the age, if your productivity is declining, then what you will see is that for most countries, it's an irretrievable kind of situation. If you see here on this graph, there are 4 lines. There is the line on the top which is red, which is China, which is declining precipitously. Then there is a blue line, which is Europe, which is also declining. Then there is a gray line, which is US, which is also declining, but eventually it stabilizes thanks to your kids and grandkids. And then there is India, which is the only one which is consistently going up. Now, obviously for the world, if, in India, what is going to happen is that nearly 70% of our population, in the next 7 years, 70% of our population will be in the working age, in the productive age, right? And do you know what the government is doing? What is most remarkable is that when we as a country are going to have maximum people in the productive age, well before that, we have started investing quite dramatically into enhancing the productivity of the people, right? Say, for example, the biggest things which have happened in the last 10 years, we have probably the best telecom network. That is one of the crucial ingredients for high productivity. We have started investing heavily into infrastructure, where there are roads, ports, airports, and, seaports, all of those things are being, railways, all of these are being invested in. We have 24/7 power, which was not the case 10 years back. And, nowadays, for example, the government is pushing that first make people doctors and CAs and then let them learn English. Now, I have heard it firsthand from my bosses who didn't come to Bombay, who were not born in Bombay, but they've come from all over the country and then landed up in Bombay. And 10, 20 years back, if you did not know English, it would be a struggle to be a doctor or a chartered accountant, right? But today, what is the government saying? That first let them become a doctor or a chartered accountant, they can learn English later. Why is that being done? That is being done to enhance productivity of the people. When we do production-linked incentive, why we are saying you cannot assemble and export? You have to bring the technology and you have to manufacture locally. That is being done to improve the productivity and the skill set of the people. So basic point is that growth is always a function of population and productivity. We are entering the prime of our population, and at the right time, I think a lot of effort and investment is being done to enhance the productivity. All investment in healthcare, all investment in education, all investment in social infrastructure, all of that goes towards enhancing the productivity of the people. So what you're going to actually see is that, eventually, one other arithmetic you must remember, that when GDP grows, thankfully population doesn't grow as fast as GDP, right? So when GDP grows, population doesn't grow as fast. So when GDP grows, per capita income will grow disproportionately. Is that right? जितना GDP grow होगा, per capita income उससे ज़्यादा fast grow होगा. And the way per capita arithmetic works is that if our per capita income was say $1,000 10 years back, and the cost of roti kapda makan was $900, the disposable income would be $100. But when per capita income goes from 1,000 to 2,000, the disposable income goes from 100 to maybe like 300, 400 or 500, because cost of roti kapda makan will go from 900 to whatever the inflation rate is, right? So you should always remember this relationship, that when GDP grows, per capita income will grow disproportionately, and when per capita income grows, disposable income will also grow disproportionate to that. So GDP जब grow होता है, disposable income बहुत तेज रफ्तार से actually grow होता है. And उसके वजह से, you can see what is the impact of that. What is the impact of that? You can see that in the last 5 to 10 years, just look at this statistic. In September 2017, the biggest impact is on discretionary consumption. So you see in September 2017, consumer discretionary, there were only 50 out of 500 companies of BSE 500 were consumer discretionary. Okay? And within consumer discretionary, the biggest block was just autos. So there were 22 auto companies and only 28 non-auto discretionary companies in BSE 500. In a span of 5 years, see the dramatic change. That 50 has become, how much has the 50 become? It has become 71. And the change is not auto companies, the change is discretionary consumption. And you can see examples of all the brands that I have put here. Now today, if you are on social media, it is very, very fashionable, very, very popular to say that all this is hyped up and this is all a bubble. You know, I think never listen to people who give you all these stories. In the next 20 years, you are only going to see more and more companies related to discretionary consumption coming in the market. Okay, you know, I'll tell you another thing, that if you want to make money, it is very important to be skeptical. But the problem with skeptical people is that they forget that there is very thin line being between skeptical and cynical. So be very careful. Making money, skepticism is very healthy. But making money, if that skepticism becomes cynicism, it is actually disastrous. Correct? So if you see in the next 15 to 20 years, the single biggest change is going to be disposable income, and the single biggest change is going to be discretionary consumption. Because when people move from lower middle income to middle income, their first priority is to look better and live better. Is there any reason, tell me something, is there any reason why all consumer companies are coming to the stock market? Or even take our industry, why is it that all broking companies, wealth companies, asset managers and insurance, why is it that they have got listed only in the last 5 years? Why not 10 years back? Why not 20 years back? Why only last 5 years? Why is it that all these discretionary consumption companies are coming to the market only in the last 5 years? Why not 20 years back? 20 years back when I started my career, the company I worked for, they launched a fund called FMCG fund. उसमें 5 स्टॉक होते थे, 6ठा स्टॉक मिलना मुश्किल होता था. Today, if you see the fact sheets of mutual funds, there is nothing called FMCG, it's called consumer. And consumer has been subdivided into consumer staples and consumer discretionary. And consumer discretionary is subdivided into apparels and footwear and beauty products and whatnot. Correct? Why this change has happened only in the last 5 to 10 years? It's obvious, because only in the last 10 years, we've gone from being a poor country to a lower middle class country. And in the next 10 years, this will only accelerate, because we'll go from being lower middle class to becoming a middle class country. What is the biggest listed sector in our stock market? Financials. Second biggest? IT. What is the biggest listed sector in China? Consumer discretionary. It's discretionary consumption. Sorry? In China, the biggest by a mile is consumer discretionary. It's 30% of their benchmark. In India, it is 9% of BSE 500. That's the difference, right? So what we should keep in mind is that when you become a middle income country, saving, investing and consumption, that is what actually changes. And thankfully for us, we are not the first one to traverse this journey. This journey has been traversed by many countries before us, right? And the whole history of the world shows that when you go from 2000 to 4000 to 6000, this actually works like a video game. When you were kids, you might have played Prince of Persia or any of these video games. How do these video games work? When you cross levels, the new tools and weapons open up for you. The game becomes faster, the game becomes complex, but new tools and weapons open for you so that you can play better. Why I'm comparing this with per capita income? Because exactly the same business. If per capita income keeps rising, more and more sectors become more and more material. Now you know why all these sectors got listed only in last 5-10 years. The first insurance company to cross 1000 crore profit is only in the last 3 to 4 years. If you cross 1000 crore profit, you can make 40-50,000 crore market cap. Otherwise, why will you get listed? Right? So this is all changed only in the last 5 years. And you can visualize for yourself how much it will change in the next 10 years. That is the key thing to keep in mind, right? And you know, I'll not take a lot of your time. I know that time is a constraint, but just last couple of thoughts that I want to leave you with. Just keep this in mind. Returns are always made on growth. So investments will follow growth. Very important thing, growth is relevant only if it comes at scale. If you're an African country with 50 billion GDP and you grow 20% a year, it doesn't move the needle for anybody. Because your incremental output incremental output is just going to be some 5-10 billion. It doesn't move the needle for any Apple, Samsung, Tesla, or anybody. But if you are 3.5 trillion and you grow 7%, then your additional incremental output is 250-300 billion, and that means you are adding one Pakistan every year, because Pakistan's GDP is about 275 billion, correct? So that's the size that you are actually adding year on year, every year. And there are not many countries, like for example in our country there is big controversy, when will we touch 5 trillion? नहीं 2024 क्यों बोला, 2026 में होएगा. How does it matter? There are hardly any countries which ever crossed 5 trillion, right? If you study physics, you are told that vectors have magnitude and direction. In the stock market, only important is direction. Don't get into hair splitting about when it will happen and how much it will happen. The fact that it will happen means you are in the right place. And I think that is all that it actually requires. Okay? And the last one point is that, by the way, all economic growth does not mean stock market growth. So if you were to actually look at China, for instance, they've blown the lights out on economic growth. But their stock market has given negative return in the last 5, 10, 15 years. It doesn't mean there won't be a trading rally. It doesn't mean they cannot outperform us. They are outperforming us in the last 3 months. They may outperform us. But if you take the long range of 5, 10, 15 years, whatever their economic growth is there, it has not translated into stock market growth. And you are perpetually told that India is trading expensive. You heard that India is expensive? Don't listen to people who keep repeating that, because they are talking without data. It is well known fact that countries which are democratic, they trade at higher PE multiples vis-a-vis countries with less democracy. जैसे हमारे कंट्री में भी डिबेट चल रहा है, हम डेमोक्रेसी है कि नहीं, वो अलग बात है, बट डेमोक्रेसी कभी ब्लैक या वाइट नहीं होता है. इट इज ऑलवेज अ स्पेक्ट्रम ऑफ ग्रे, एंड द वर्ल्ड डेटा शोज दैट वी आर लाइट ग्रे, राइट? सो कंट्रीज विच आर डेमोक्रेटिक ऑलवेज ट्रेड एट अ हायर प्रीमियम. Countries which have a track record of protecting minority investors' interest, they always trade at a premium. इसके ऊपर भी हमारे यहाँ पे debate है, but the fact is that at a world level, if you compare, we have a much better track record of protecting minority interest. Countries which have low exposure of state-owned enterprises in their indices, they always trade at a premium. उस पे भी हमारे यहाँ बहुत विवाद है, but the reality is that in our market cap, state-owned enterprises have very less weightage, and in most of our peers, there is a very, very high weightage. And the last thing is that countries which have respect for capital, like if you take PE multiple, you might find that many countries are cheaper than India. But if you take price divided by free cash flow, especially free cash flow after removing opportunity cost, India will trade at a premium always, because it deserves a premium, right? So that doesn't mean there won't be trading rallies or there won't be any relative change in valuation. But do not listen to people who keep saying that India is expensive, India is expensive. India is expensive for a reason. The reason is the growth potential, but more importantly, stock markets don't operate in isolation. Stock markets operate in a framework. And that framework is about regulation and minority investor protection. That framework is about democracy. That framework is about respect for capital. And that framework is about the market construct itself. So you are obviously in the right place at the right time. Don't think you are lucky. You are lucky for sure, but it will take a lot of doing, So just keep the ball in the court. Thank you very much for listening me out. It's my pleasure speaking to you.
Thank you so much, Ashish. Please stay on the stage. And I would definitely like to recognize my dear friends, Debashish sir, Gaurav Goyal, Gaurav Suri, Hemant Agrawal, Rajesh Singh. All of you, thank you so much for coming here. Of course, Kailash is our speaker also. So, of course, Kailash Kulkarni also.
He's following me.
Okay, so Ashish is saying Kailash is following Ashish everywhere.
Thank you so much, sir. Once again, I would request Alpa ji to please come forward and felicitate. I would also request Sandeep sir to join in. Thank you once again. Thank you so much for your insightful discussion. Thank you, Alpa ji. Thank